But let's move on and talk about numbers. Anand Athreya, CEO and MD, and Sumit Dhingra, CFO of Tejas Networks, is now joining us to talk more about numbers and also the roadmap from here on. Anand, thanks very much for joining us. Let's start by understanding, there was a very healthy top line growth this time around for sure, but appears to be some pressure on margins as well as profitability. Was it a one-off or was it a seasonal thing? What exactly happened here, and what's the outlook from here on?
So good morning and thanks for having us. Look, we are in the process of executing and delivering to the BSNL order. Obviously, the margin is always blended. So on the wireless side, it's slightly lower than the wireline side. And as you build in, more customers and more, eventually these things should get balanced out.
Good morning, gentlemen. This is Vinny joining in the conversation as well. So, Sumit, what I want to understand that now what should we be expecting from the margins for FY25? What is a sustainable level that we are watching out for from the company?
Look, this quarter we were at around 15% EBITDA margin. I think the quarters before that we've done, or the years before that we've done higher margins as well, particularly on the pre-COVID levels. Now, as Anand briefly mentioned, I think final margins become a blend of or an outcome of various projects, various deliveries that get done during the quarter. So on a steady state basis, I think what we are looking for is to first be able to achieve the margins that we've achieved in the past on an ongoing basis. And thereafter, anyway, we would look to sort of continue to improve.
On the big opportunities front from here on, what are your thoughts, the direction which the company is taking?
Look, first things first, we want to execute on the current project. I think it's going to be one of the largest in the world, and we want to make sure that we execute that very well. So that's number one. Then as we do that, we are continuously building out the portfolio, right? We are building the 5G portfolio as we speak. So I think it's very important to have a reasonably complete portfolio to be able to compete not only domestically, but also internationally. And obviously, we also want to make sure that, we are a chosen supplier even to BSNL even going forward. And we want to make sure that we have a portfolio to get there, right? I always believe that once you have the products, then it's easy to go land and expand in not only, where you are incumbent, but also in other places.
Sure, Anand, just to follow up, right? You're talking about the current project that you're planning to finish. I believe that's going to be in the next 2 quarters in terms of BSNL, the execution that will be coming in the next 2 quarters. So beyond that, also what we understand that Vodafone also has recently concluded the fundraise. They are looking at 4G, 5G expansion. Any initial talks that you are in with other players as well?
So look, the BSNL execution will happen in this financial year. So that is well on its way. We are also talking to other domestic private telcos as well as international. As you know, in service provider, these things are pretty long lead. They take actually some time. But, I think now we are more confident of participating, with a lot of them, because now we've gotten, we have shipped as of end of last quarter, we shipped close to 27,000 sites. That is significant, and it gives us a lot of confidence to actually, talk to a lot more folks.
Sumit, I want to talk about this margin management once again. Once this big project actually is executed, going forward beyond that, the opportunity, the growth opportunity which the company is actually eyeing, what are the levers of margin which the company has, and gradually which will lead to that reversal in margin that you're talking about?
Okay, look, there are various factors that go into the margins. One is, and one key important factor is that as we scale up our business, as we go get more international deals, more private deals, we typically expect the gross margins to improve. Second factor, which could have a significant bearing on the margins as we go and scale, is the overheads. So a large part of our expenses, which are other than the material cost, are fixed in nature. A lot of it is people cost, a lot of it is cost related to product development, R&D, general overheads, sales and marketing related expenses. So as the scale improves and revenue growth becomes steady and faster, the increase in these expenses is not expected to be at the same pace, which should lead to improvement in margins on an ongoing basis with scale and diversity of product and customer base.
Anand, when you're looking at it in terms of execution of orders coming in from the international front, you have been executing orders there, but the pace of the pickup that we're seeing there is not as much as one was expecting. What is it that the company is doing differently to increase or ramp up international orders? Anything different that you're watching out for? And have you seen that started seeing a pickup at least now?
Yeah, so we are investing heavily into sales and marketing. We are building our teams, let's say, in particular in North America and other places. And as we mentioned, we actually won a tier 2 service provider in the US. That's one of the first. But again, these things have their own cycle. You have to go win that, go through the proof of concept, integrate with their OSS, BSS systems. But I think we're beginning to see interest in definitely tier 2 and tier 3s in, let's say, North America in wanting to talk to us.
Okay, thank you so much, Anand and Sumit, for joining in with us, talking to us about the outlook of the company going forward. Thank you so much for that. Bye.
If you like this video, then like, share and subscribe to ET Now.